All right, welcome back. All right, we are now at part two, all right, where we talk about trend reversal and how it may looks like. So I know you already seen it happen, okay? So we're gonna back up a little bit and we're gonna do it again as far as marking down, how market did what it did and with the trend reversal aspect, okay? So what we have is a zone that was already set, okay? And we will learn to understand how the market, right, will give us different variations of the break and retest. Now, again, since we're talking about buy setups, break and retest for the buy, again, let's go ahead and go over the downtrend aspect because we're talking about from a downtrend to a uptrend. That's what a break and retest is. Okay, so it's a trend reversal. Okay, for the buy, and then of course I'm gonna cover the continuation. So it will cover that either in part 3 or 4. Now we got a bearish market, a downtrend, or a market that is currently selling. All right, straight to the point. Now we're just gonna identify. We gotta bring it to life, right? So we need to understand what's going on. How do we know it's a downtrend? Well, let's go ahead and mark the low points, the structures, right? So these will be the lower lows, right? Where each low is lower than the previous low, and these right here will be all low highs, right? All of these lower highs, okay? Where each high is getting lower than the previous high. Okay. Now we have a different variation of the trend reversal where we don't exactly have a clean double bottom, but we do have the market hitting, right, the zone 3 times, right? The first time it bounced. Oh, nope. That's not what I meant to do. The first time it hit the zone when it was selling, right? Bounce off the zone here, went up, right? It's like a typical retest, just like right here. Break, retest, to fall, right? It broke here, right? Going back to retest to fall. That's where it bounced off. And this time around, it slipped slightly a bit lower, right? So that right there will be, it could be the same zone depending on how this candle was, or if it's not, this will be the new zone for the new lower low structure point. Okay. Now, market, right? Market went, hit the zone, come back down, just dropped somewhat a little bit lower, and then went back up and stopped basically in the middle, right? Nothing wrong with that. That's still a 50% or 61% retracement from this top point to that point, right? Now, after that, we wanted a previous low high to get broken. Of course, we was looking at this one first, but we have to move accordingly to the structure. Okay. So after this one, it came and stops here. So we had a new low high. So this right here, okay, is the zone that we was looking at to be broken and retest. And market did exactly just that. Now, after, not only that it broke a previous low high, it broke the last 2 previous low high. I'm talking about from this one and that one. Now, just to throw that in there, if we was throwing a trend line in there, please remember, when placing a trend line, it has to be placed from the high point, right? It could be from the highest point to the new high point. Why? Because this is the structure that needs to be broken to give you a trend reversal. So when you place the trend line, it has to be something kind of like this. Okay. You don't need it to match every single one of them. That's why trend line can be readjusted, because what you need to be broken is the previous low high, right? So market did break that high, as you can see here. But not only that, it went to break the previous structure point. Now, at this point, y'all know what we have, right? Just like in the first video, we got from low highs to what? Higher highs, right? Higher highs. At this point, it is higher than the previous high, right? So we know we got the break, right? We got the next high. Now we're waiting for the pullback. In the case of this pullback, it's coming back to this structure point here. Right here is where we would wait for a price action, right? We wait for a price action so we could take all buy to go to the top side. Now, the price action for this setup would have to be again, bullish, okay? PA, all right? To be more specific, it has to be a bullish engulfing price action, all right? That tells us that the bullish engulfing, that tells us that buyers have now taken over. It's time to join that, okay? Very simple, straight to the point, okay? Now, we could ask ourselves, could it have come down to here? Yes, it could have. It would have made no difference because what we needed was a trend reversal structure where the market goes from giving you lower highs and lower lows to higher highs and higher lows. So remember, for a trend reversal, we need a previous high to be broken. And when we take our buy at the higher low because it will be above the previous lower low to continue up like so. Okay. Very simple, straight to the point. So let's go ahead and pull up another one. Okay. Now, the next one we're going to go over, it's going to be kind of like the same thing, but this time around, we're going to have it ranging in a way. No, let's not do the ranging first. We're going to do a deeper pullback. What do I mean by that? Where lately, based on what we've been going over, right? We've been getting a retest at the last low high, right? Now what we're gonna do is we're gonna get a retest at a lower low point because it's not always going to be at that zone point. Okay, so let's go ahead and bring it to life, right? So we know this is a bearish trend or a selling market where it gives us lower lows, and after a lower low, we get low highs, and again continue on from a lower high to a lower low, from a lower low to a lower high, from a lower high to a lower low, from a lower low to a lower high, right? So just like right there, we got a break of a previous structure point. To be more specific, we got a break of the previous lower high. Now we're going to wait for the market to give us a higher low. Now, every turnaround point is going to, every turnaround point is going to be at a previous turnaround point. What I mean by that is it's either going to bounce off this point because that was a turnaround point where it fell, or it's going to come back down to this point. That's where it stopped at to buy up. So that's exactly what we're going to do, right? We're going to see the market retracing at least 78%, more than 61%. Okay? Because not all the time it's always going to be 50% or that 61.8%. Just understand market will go to the next structural point. And this right here probably will be at least a 75, 79% retracement. Because, between here, if this is 0 and this is 100, okay, about within here, okay, would be, let's clean that up a little bit, would be your 50, and then below would be like your 61.8%, and then within here would be 70-ish. So that's what I'm saying, about 70 to 70, 78%, okay? And then to here will be 0, like a complete retracement. In the case of and also that goes hand in hand with a fib. Since we're not going over Fibonacci, so we're not worried about that because we have not covered that yet. But that right there will be our retracement point, right? So let me remove this real quick. All right. So market, in the case of this one, right? Market did break to give us a new higher high, right? That's higher than the previous high, okay? So now we're waiting for the next high low, and it just happened to come to a specific zone where on the left side where it was a previous lower low. Market will always, always, always turn around at a previous structure point, okay? So here we will be looking for a PA. Again, to be more specific, we're looking for a bullish engulfing price action, right? So let's bring it to life. The bullish engulfing would be like so. So this would be all selling candles, right? So I'm just going to do the most common price action, right? the single bar bullish engulfing, where it took one bullish candle to engulf the previous bearish candle. So another way of saying that, right? It took one buying candle, right, to overtake or to close above the last selling candle that indicate that, hey, now buyers are now in control of the market, not sellers. Okay. It engulf it because it closed above. Right there would be your entry point. Okay. That's where you would have entered. Okay. So remember, the engulfing bar mean market have engulfed or have taken over. To be more specific, since it's a bullish engulfing, we know that buyers have engulfed sellers. And of course, the market is consist of bullish and bearish engulfing, but you look for the bullish and bearish engulfing at specific zone at major key levels. And those key levels will always be based off monthly, weekly, and daily time frame. All right. Once you mark your zone on the higher time frame, you will drop down to your designated time frame. That's the time frame you will be looking to pull the trigger, and that time frame is a 4-hour or the H4, because we trade the 4-hour time frame when it comes to pulling it, because we take 4-hour bullish engulfing. Now, if you also take daily price action like I do, you know, you will be sitting on this setup on the daily time frame, and your price action will always be available to you at 5 p.m. Right. So I'm in Miami, right, Florida. So my price action will always be available at 5 p.m. That's when market close. So pretty much once market close and reopen, you will be able to pull the trigger. Hopefully, you know, it's not a crazy spread. It's right where you need it to be. You'll be able to pull that trigger probably by 6, because by 7 spread technically closed. So yeah, you don't have to stress out and worry about, oh man, am I going to be able to take this trade or not? Or waking up early in the morning, sitting there for hours upon hours. Okay. But yes, this is a variation number 2 when it comes to the break and retest to go to the upside, because sometimes it's not always going to bounce off the first low high. Sometimes it will come back down to the previous, not just that one, the last low point, not so much the previous. It will come to a low point. Sorry about that. Okay. If I would have said, you know, previous low would be right there. All right. So for variation number 3, so it doesn't go in that same order, but it's really up to you. Okay. So for variation number 3, we're gonna see it just like this. Instead of market bouncing off that same zone, right? It's gonna bounce off the last one. Okay. Excuse me. Where are you, buddy? All right, here we go. All right, downtrend, lower lows, low highs, right? So we have a selling trend. We have a bearish trend. Okay. Now, with this bearish trend, for us to, bring it to life. Right? So let's put what we need to put in there. That way we understand that it's a selling market and the characteristic of a selling market or a bearish trend. So that'll be market structure within itself. Okay. So lower lows, those are the structures, followed by low highs. So always remember, all right, downtrend consists of lower lows and lower highs. After each lower low, look for the low high, and after each low high is a lower low. Okay. And again, for a trend reversal, right, a previous high has to be broken. Okay. Make sure you can see that. Okay. A previous high has to be broken. Let's go ahead and put this one in. Also, boom. What we're going to do is we're going to bring the zones back to life. Now, I want to make that very, very, very clear. Okay. At every turnaround point, meaning at every lower low, at every low high is a turnaround point, right? So every one of them is a zone, meaning it will look something like this. Okay. You see, after we get the break, it retests. Okay. I know we're not talking about sell setup continuation. We're talking about buys, but I just want you to understand those are the zones. Okay. It pretty much connect. Okay. Now, just like before, right? A previous high was broken. To be more specific, a previous lower high was broken, right? And the market went and gave us a higher high. Now we needed to come back down to give us a low high. In the case of this, we had this market falling down all the way back to the previous lower low, right? So it's at equal lows, right? So basically, you do have a break of a structure where market breaks a previous low high, and then it came back down to match this lower low to give you a possible double bottom setup. Why is it a possible double bottom setup? It's because we haven't had market have not given us a confirmation that tell us, hey, buyers now have taken control of the market to go up. That's why it's a possible setup. Okay, once it becomes a valid setup, we would get all bullish engulfing, right? So let's, since this is bearish, so right, so let's just say the last selling candle will look like so. We're gonna do a 3 candle bullish engulfing. Yeah, why not? 3 candle bullish engulfing where we got 1, 2, 3. Basically, it took 3 candles to engulf the previous one. All right. If I do a 2 bullish candle engulfing, so let's move this. It means it took 2 buying candles or 2 bullish candles to engulf the previous, okay, to engulf the previous selling candle or the previous bearish candle or the previous falling candle. I'm pretty much saying the same thing, just in different ways. Okay. So we didn't just have a double bottom. We also had a change of characteristics from a selling trend where we get lower lows, right? With low highs to a higher high, right? And a lower low, which is the same point. So that is not a higher low, okay? Because it's matching the same point. Now, for us to get a higher low, it's, you know, it would have to be at any moment in time or at any point, either if the market were to do something like this, let's change the color, right? If it were to do something like this and then something like that, right? Then this right here will be considered as a high low. Or, right, let's just say it bought and then it broke through all zones to come to match this right here and then come back to this, right? We have equal highs, right? That'll be the same higher highs, right? And then here, if we get a PA or a price action to go up, then we will have a higher low because it will be higher than the previous lower low. All right. So that is, again, a trend reversal coming from a bearish market to a bullish market. Okay. Very simple, very easy. Feel free to watch this video, pause it until you truly understand. One thing that I recommend that you do, which goes hand in hand with your homework, because you're going to have to create this illustration on your textbook or your composition notebook. That way you show me exactly how it would look like. Okay. When you draw this out, you're going to be more engaged with it. It's going to help you retain that information so much easier. Okay. So again, this is part 2, and I'm gonna see you guys on part 3, where we go over, you know, ranging and into the breakout, and then of course a continuation breaking retest. Okay. Of course, again, like I said, I want to keep everything within like nice 10, 15 minutes video.